Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar extended its slide Friday after Thursday's price action reversed sharply from the top side of the range around the 71.60 and now crushes the level of 69.90. The bearish divergence that was indicated from the RSI and the MACD strengthened the move and now exposes the region around 68.20, which is the 60-day moving average, an important level and one to keep an eye on. Any advancement at this stage sees a cap around 69.55. Looking ahead, the RBA rate decision on Tuesday is expected to deliver its fourth successive quarterly point interest rate hike from 3.1 to 3.35 as the meeting starts and finishes at 2:30 on Tuesday, and is expected to follow up its fifth hike in March. In recent data, rise in inflation from 7.3% to a 33-year high of 7.8 in the last quarter is more than double of 2-3% target for the RBA. So let's see if the market does continue its bearish move, even though we are seeing a slight recovery in the Asian market this morning. The US dollar, which measures the greenback strength against a basket of 6 major currencies, surged on Thursday from the lows around 100.80 and continued on Friday to 102.80 following a stronger than expected US job number. The blockbuster jobs number report triggered much volatility right across the board as investors try to recalibrate the expectations on how long the US Federal Reserve hawkish path will need to continue in its quest to fight high inflation. The US economy added 517,000 jobs in January, blowing the estimate of 193,000. And along with that, the unemployment is still around 69-year lows at 3.4%. It is assessed that the technical outlook as the dollar surges could put further pressure on the support level seen at 107.40.50, and a break there would expose the region of 106.20 and reassess. Technicals are heavy and keeping an eye on this ADX in case the trend does strengthen to the bear case. Well, having from nearly 2 weeks consolidated, dollar yen finally picked up its pace and rallied and still continues and now looks towards the region of 132.80.90 as a potential target. A break there would give further scope up to 134, but one step at a time. Let's see how the market plays first of all into that resistance, and if it does overcome by the bullish challenge, then it would leave further room for at least 200 points to the upside to 134. Like the Australian dollar, the pound has suffered quite a lot in terms of casualties as the bears weigh heavily on the bullish challenge, with the ADX now trending to a bear case, and also with the MACD married up to the RSI, it does give exposure to 119.55 and reassess from there. I may see a little bit of profit taking, but overall these two heavy candles has put a bit of a different view on the sterling in the short term to the bear case. Having posted an engulfing candle, or to some of us it's a key reversal, the market plunges and now reaches its next objective seen at 1,865. In light of the pattern and the dollar strengthening, could see further risk if we see a close under 1,865, and this would see a move to 1,820 to 26. Any advancement now finds resistance around 1,870 and therefore may see a slight squeeze beyond their breach to 1,881, but not sustainable. Wrapping up with oil, after picking off the supports all the way down, reaches the target now $73 a barrel. It's now time for myself to sit out in the short term to see how the market plays from here. However, for those trading, keep an eye out if you see a break of 73 towards a region of 70.5 to 71.80 as a potential target. But I do anticipate that bearish traders or investors may snap up offers as they start locking in their short positions. Overall, though, as I mentioned, I am neutral and see how the next 24 hours goes. Well, that wraps it for the start of the week. Thank you very much for joining me. And as always, look after the intraday, Paul. I hope you enjoy the rest of the day.